A judge and the insurance commissioner have signed off on a 17% rate increase for State Farm's homeowners policies, despite objections from consumer advocates and fire victims.
Yeah, on your side's Christine Lazar joining us now with what this means for you. And I know it doesn't mean good for anyone.
No, and it's not just those who live in the fire-prone areas. This is going to be statewide.
Yeah.
State Farm, God bless you. It's okay. State Farm saying they need this money to be solvent. Consumer advocates saying, do you really? And then, of course, fire victims saying, hey, we're having a hard time getting them to handle our claims properly. And now all of a sudden we've given this rate hike. The insurance commissioner, however, is saying those are two separate things, right? Wow. We'll see. So this impacts all State Farm customers in California, regardless of whether they live in those fire-prone areas. State Farm was also granted a 15% rate hike for renters and condo owners and a 38% increase for rental properties. I'm joined now by insurance expert Carl Sussman, who is in Sacramento for the hearing. And Carl, thanks for joining us this morning.
Good morning. Thank you. And bless you.
Thank you. She appreciates that. Well, why do you think the judge and the commissioner approved this? And did they add any stipulations to that rate increase?
Well, the judge approved it because he looked at all of the documentation. There was a 3-day hearing that went on, and he found that the rate increase was justified financially. Simple as that. I think the insurance commissioner approved it because he took the advice of what the judge said. Now, as far as stipulations go, there are some interesting ones. The first thing is that this is just a mini hearing. You could look at it that way. It's a temporary approval for this rate increase. But between now and October, there's going to be a full hearing. Okay, so we get to do it all over again. And if it turns out that the rate is not justified at that hearing, State Farm is required to refund the money that they've just increased plus interest to all of their policyholders. So there are stipulations on getting money back. Plus, in the interim, State Farm is not allowed to non-renew any policies in California. And they also have to bring in about $600 million in money from their parent company immediately to California to shore up their bank accounts.
So according to that hearing, explain why State Farm is arguing that it needs this increase to stay in California.
Well, they put in a rate increase prior to the fires, somewhere around 30%. I think that was in November or maybe even October of last year, and nothing came of it. Now we have the fires that came, and they're paying out. I think they have over 12,000 open claims right now. So they are in a financial position that they desperately need cash. Their financial ratings have been lowered by AM Best, which is an organization that does nothing other than rate the financial solvency of insurance companies. So when you see an insurance company that's waving the white flag saying, hey, we need money or we can't pay claims, we need money or we can't stay on all of these risks in California, we have to step up and listen, because a company like State Farm, you just don't hear that happening unless there's something really bad going on.
You know, Carl, I keep hearing from fire victims who have State Farm that they've been slow to pay, quick to deny, and they didn't want to see State Farm get any more money from homeowners. And I know you have your own clients who have had struggles with State Farm. So what's your take on that?